according to a report from CFG Advisory, the COVID-19 pandemic shock and the technical Naira devaluation are expected to have a negative impact on the Nigerian economy. With an impending recession looming on the horizon, the impact on households, small and medium-scale businesses, corporates will invariably result in a weaker domestic economy. Joining me live to discuss the report, titled "The Naira Exchange Rate Devaluation and Impact on the Economy," is the CEO of CFG Advisory Group, Mr. Tilewa Adebajo. Good morning to you, sir. Welcome to the Global Business Report. What period does this report from CFG cover?
Thank you very much and good morning. What we have done is that we've looked at the devaluation of the Naira over a 20-year period from 2000 to 2020. And we have done a comparison with the devaluation of the dollar against the pound and euro over a 10-year period between 2010 and 2020 to see the results that we have in comparison and how that has impacted both economies.
Fantastic. Okay, so over that period, by how much has the Naira been devalued over the period in which your report reviews it?
Unfortunately, the Naira has devalued on average over the last 20 years on all the multiple windows we have by about 400%. Over the last 4 years alone, Naira has devalued by 100%. So in 2016, between 2016 and today, we've seen a devaluation of 100% on the Naira against the dollar. And the worst part of this is the fact that we do not have a market-driven exchange rate mechanism. We have a static exchange rate mechanism, which has impacted us negatively over this period. If you take a look at the comparisons with both the Naira, the dollar and the euro against, and also the dollar and the pound against the Naira, you find out that those charts, you see the exchange rates going up and down over a period of time. And of course, because of Brexit and other economic factors, you see a trajectory of devaluation of the euro and the pound against the dollar. But what you see there is movements up and down, appreciation, devaluation over a period of time. And if you take a look at the band of devaluation, you're looking at going from maybe 0.6 to 0.8, as opposed to we going from just under 100 Naira per dollar to $450, 450 Naira per dollar today. So it's important that we eliminate this static exchange rate mechanism and we begin to look at a market-driven exchange rate mechanism, because it has cost us dearly. Because at times, even when the oil prices were trading at over $100 a barrel, we never revalued the Naira, which is just a big shame.
Thank you for that. So this static exchange rate mechanism, I understand it caused some issues with us, with JP Morgan's emerging market bond index. Can you refresh our memories of what happened back then?
Yes, late in 2015, 2016, as you've seen, Nigeria was, we had been part of the JP Morgan Global Bond Index, which gave us very good credibility, because if you're on that index, a lot of fund managers don't think twice before they put money into Nigeria. And with money coming in, it helps to depress it helps us stabilize our exchange rates. At that point in time, when we were experiencing some challenges before we went into the last recession, the JP Morgan indexed people asked us to begin to let our exchange rate mechanism be more transparent. We shouldn't be managed, and it should be more market driven. We refused to heed the call, and despite all the warnings they gave us, we didn't do that, and they took us out of the index. Of course, we suffered a lot of credibility in that point in time, and you knew that the economy went into a recession, and we had a contraction of the economy by minus 2.5%, which we still have not recovered from.
Thank you for that. Okay, so now speaking of a contraction, the report says that there's, in fact, I'll get to the contraction later. Let me actually stick with the devaluation. The report says that there's another devaluation is possible or likely. What circumstances could lead to? Because of course we already had the technical devaluation earlier. So what circumstances would lead to another one later this year, if possible?
Well, first of all, let's take a look at oil prices. You see where oil prices are today. That's number one. It's not rocket science. If you take a look at the budget was estimated at $57 a barrel. and it was revised to $30 a barrel. And we know that oil is not trading today at $30 a barrel. So we have revised our budget from 2.5 trillion, the oil revenues from our budget from 2.5 trillion to 244 billion. That is a 90% revision. Right now, we're facing a $15 billion gap in terms of funding our budget this year. We've gone to the IMF, the World Bank, and the African Development Bank for 7 billion. Now, with that 7 billion, there's still another hole of another 8 billion. We still don't know where we're going to finance. So we need $15 billion to be able to balance our budget this year. Coupled with that, our reserves are $34 billion and declining. Right now, the foreign exchange market is closed. And I'm sure that by the time the demand comes up and the market opens, you're going to be looking at about $2 billion that is ready to get out of Nigeria in a hurry. If you take a look at the non-deliverable forwards market, the Naira is presently trading at 515, which gives you an indication of the future price of where the Naira is going to be. So given all the circumstances and what is going on with the pandemic shock, it is clear that we should expect another round of devaluation within the next 1 month.
Wow, thank you for that. Okay, so Nigeria is facing COVID-19. We're facing low oil prices. We're facing falling reserves, a large budget deficit hole. There have been projections of a recession from the IMF, the World Bank. CFG also has a projection in your report. How bad do you think that this recession would be if the projections come out correctly? And how long will it take for us to get out of it?
Well, to be honest with you, if you take a look at all the World Bank, IMF, you hear anywhere from between 2% contraction. World Bank, IMF is looking at 3.5%, and some people are predicting as bad a contraction of 8%, depending on who you talk to. But what is important is that what are we doing about it? So the way we're going to stop this is to see what sort of policies we can put in place between now and the next couple of months to be able to sort this problem. Where we are in a double jeopardy, if you see what I'm saying. We have to deal with the pandemic. At the same time, we also have to manage an economic crisis. So we're dealing with both a health crisis and an economic crisis at the same time. So it's important that this is properly managed. The way I see this, I do not see us coming out of this until the first quarter in 2022. So it's important that we tighten our belts for the next year and a half, and we can begin to see some sort of recovery first quarter 2022.
Thank you for that. Okay, your report also talks about rising inflation. In fact, inflation for March year-on-year just came out and reported at 12.26% for March. And you talk about inflation, rising inflation, and thinning profit margins for corporations. Can you touch on that as well, please?
Well, what is happening is that if we take a look at the devaluation, for instance, if I brought in $1 million into Nigeria in 2016, I would have gotten 200 million Naira. Now, if I'd invested that money in all sectors of the economy, be it the stock markets, maybe into a factory or into bonds or into treasuries and all that, if I had to come out of that investment today, I'm going to require 400 million Naira. Now, the question is that which business would I have done, or which business would anybody have done in the last 4 years that would give you 100% return just to cover, I'm saying just to cover the devaluation issue. And, you're talking about inflation at 12%. So if you're looking at devaluation of 100%, inflation of about 12%, you have to have made an investment of maybe 150% return or above for that investment to be worth your while. If you had kept your money at $200 million in a bank account abroad or even in Nigeria, and you change that money today, you'll be better off. So the devaluation and inflation is eating into the profits of companies, and it's making our assets quite cheap. So if you're an exporter, it's good for you, but if you're a foreign investor, Nigerian assets are extremely cheap. So that's really where we have the problem. And to answer the question, you were trying to find out about where inflation will be at the end of the year. Well, looking at all the pressure that we're going to face, the problem we have also is that monetary policy, I think, is becoming quite also static. because the monetary policy is not working. We haven't really changed our monetary policy positions in the last 2 years. What we have been doing now is that we've been playing with the loan deposit ratios of banks and, basically taxing them if they do not meet those loan to deposit ratios. But if your economy is growing at 2.5% and your population is growing at 3.5%, you have close to over 100 million people in poverty and 35% unemployment. So if I'm going to take a look at estimates of inflation by the end of the year, I'll be looking at anywhere between 18 to 20% inflation. And, that's not a very good position to be. And the irony of that is that the Monetary Policy Committee might be forced to increase interest rates at the time of recession, which is against what is happening globally. Most central banks in the world have dropped their interest rates to near zero.
Wow, that's not a pretty picture there. Would you say, I will get your opinion on this, would you say that the dollar is the single most important metric in Nigeria? How would you view a question like that?
Well, I wouldn't really say the dollar is the most important metric, but it is the income, it is the currency by which we earn our income, which is oil. And when you do that, it's a question of, yes, it is important. Oil is important. And if you take a look at the oil shocks and the level of our reserves, there's a high correlation. When oil prices are high, our reserves are pretty buoyant, and our currency, unfortunately, is not revalued or accordingly. But without a doubt, dollar is very important to us. We live in a global economy. But what is important is that in the first shock that we had in the early days of the Yar'Adua administration, because we had built up which are the buffers, which we call the excess crude account. Then Nigeria had about close to $16 billion in excess crude account. Because we built up that buffer at that point in time, we were able to withstand the impact of that economic shock. But unfortunately, today, we do not have such buffers in place. And if we're going to operate in a global economy with dollars, you have to build up those buffers. You can see what Saudi Arabia has said. You can see what Russia has said.
Mr. Adebajo, we've run out of time, but I really do appreciate you coming on to give us insights on this report. Thank you very much, sir. The CEO of CFG Advisory, Mr. Tilewa Adebajo. We appreciate your time.